Digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap here on Friday, April 21st, 2023. I'm, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's hard to believe it's Friday, but it's been a long week, too.
I feel it's hard to say April 21st. I think somewhere in my backyard, there's still my Christmas tree drying up. So it's happening fast, but luckily it means good weather is on the horizon. So nothing wrong with that. Lots to talk about on the markets this week. So let's jump right into it. We're going to talk about the LEI Index. There's some data that came out. This comes out monthly. You're going to tell us what information came out and potentially not great news. We're going to talk about employment trends index. There's some data that came out there. You're going to talk to us about the Tesla earnings. Tesla had a bad week. We're going to talk about it. And then we're going to talk about growth versus value in the markets. These are two ways of approaching investing. You're going to tell us what those are and what that means in the market today. And then, of course, we're going to get into some CSE issuer news. So let's talk about the LEI. The LEI is the leading economic index. It's and correct me if I'm wrong here, it's kind of used globally to predict economic movements, wouldn't you say?
Yeah, they break it down. There's a global index, but there's also a regional index and a country index. So, and specifically, we're looking at the US LEI information in this case, and we got the data for March. And if you can look, you can actually see on the chart here that it looked like things were starting to moderate and maybe improve a bit with the February number, but then we saw more decline here in March. And so this isn't really that unexpected. I mean, there's not too many people out there who aren't concerned or predicting a recession. So it's not surprising that the LEI data is declining. This is a composite of a number of different factors that they look at. And really, I think the only one that was up was the stock market. All the other factors were down. So you can see that we're below that recession warning level, which means that they predict that when it gets below that level, we will see a recession sometime in the next 12 months. And so, if you look at most economists right now, everyone's talking about recession. The yield curve's telling us there's a recession. And this data is also pointing to that as well.
This has been something I feel like we've been anticipating for some time. I mean, it would only make sense that at some point there is some, even if it's short, some kind of recession. Don't you think? Or
well, that's just the way the world works, right? The economic cycle goes from, growth to recession and back and forth. And so, when we say there's going to be a recession in the future, well, that's always going to be the case, unless we've managed to figure out how to completely moderate the system so that we don't have any more recessions. But that's just not human nature because we, overconsume and underconsume. And so, there's always going to be a recession. Now it's just a function of trying to figure out when that recession is. And then the thing that, everyone's trying to handicap and, all the experts are out there pontificating on, whether or not this is going to be a shallow recession or a really deep recession.
Yeah, absolutely. And how long it'll last. And how much it'll continue to affect us. Okay.
So one of the things I just want to touch on here is this is kind of an interesting chart that I brought along, and this is looking at the LEI index, but actually looking at it from a technical analysis standpoint. And what this is actually showing is that we're getting to a point right now where exhaustion typically sets in. You can see the green boxes and the red boxes indicate up or down for that index, and we've had this dropping down in the LEI index, and it's getting to the point now where it's close to the exhaustion point. These technical indicators aren't pinpoint accurate. Like you can't say like, oh yeah, there's the bottom and it's going to go up, but it's, starting to get to exhaustion, and, wouldn't be surprised if, kind of over the next few months, it started to roll and be positive, which would really surprise most people, given that, most people are anticipating that things are going to continue to get worse and that we're heading into this recession.
Well, that'll be interesting to see what happens there. Obviously, the banks have spurred, I think, some added momentum to it. So, if we keep seeing that type of thing come into the mix, then it could be bigger than what some anticipate.
That's right. Yeah, for sure.
Okay, let's talk employment. So, the Employment Trends Index, what did that tell us this week?
Well, this Employment Trends Index data also comes out from the Conference Board. And what it's showing us is that we're starting to see those employment trends decline again. And this is a composite of a number of different things. So they look at, job openings, and they look at, the number of people that are unemployed, and they look at a number of different factors out there, and then come up with this composite. And what they've found is that, it tends to lead what happens with the actual unemployment numbers. And so we're starting to see that line for the employment trend index really drop off, which leads us to believe that that's what we're going to also see with unemployment. A lot of people keep pointing to the fact that, we can't be heading into a recession because employment's really strong. But that's the whole nature of what happens in a recession, is that employment starts to get weaker. So it's not surprising that employment's strong right now when, we're talking about recession, one. And then two is that, this data from the Employment Trends Index is starting to really drop, because that would tell you that economic slowdown is starting to have its impact. And we see that every day. It seems like in the last couple of months, there's, more employers announcing that they're cutting back on the employees, the number of employees that they have.
Well, I was just going to say, aren't we also, this is a natural occurrence once we've had such a tight inflation squeeze, because, the margin for a lot of business owners is getting squeezed further and further. So they're going to do their best to try and, squeeze their costs. So you would imagine that it kind of all trickles out, one follows the other, right?
Yeah. I mean, after COVID, there was so many positions that were open and people were hiring to try to pick up capacity and business. And now they're at a point where, costs are up, and they're, hey, can two people, do the job that normally would take three? And if that's the case, then, they either get rid of one person or they just don't hire them.
Absolutely. Okay, let's talk about Tesla. We haven't talked about Elon Musk in a while, so I'm excited to talk about him. He's had quite the week. So first of all, his earnings came out. I believe, tell me if I'm wrong here, the earnings came in, they were about 20% lower than this time last year.
Yeah, they missed the street expectations, which isn't too surprising given the fact that they've had 2 price cuts this month alone in their cars, and they've had other ones earlier this year, and so it's not super surprising that you're seeing that from a just from a pure revenue standpoint. And then demand, they continue to have some challenges with supply and getting these cars built in different areas, and getting their factories built as well. And then if you think about, kind of overall economy and economic activity, well, why are they lowering the price of their cars? There must be more competition, one, or there must be less demand for their cars themselves, or a combination of the two. So it wasn't, shouldn't have come as a huge surprise, but it did have a fairly detrimental impact on the stock. The day of the earnings, you can see here on the chart that closed one day, and then the next day was significantly lower.
Well, and to add to the unfortunate earnings was also an explosion that happened yesterday. What happened?
Yeah, I mean, this is not a Tesla company, but SpaceX, which Elon Musk is involved with, had their rocket, the delay in the launch from, I believe it was Tuesday, and then when it did take off, it launched and got up a fair ways, and then had a failure and blew up. I can't remember the actual term they used for it, but it was basically destroyed.
Well, they are assuming that when stuff like that does happen in SpaceX, it can affect kind of the Tesla share price. They're estimating that it was about 13 billion in market cap that was lost this week in Tesla with the earnings coming out. So that's a rough week for them. Is it? Does
Sure
Elon
is.
Musk notice 13 billion gone?
I'm sure he does.
Okay, so that'll be interesting to see. I mean, I know for me personally, I've noticed a bunch of new companies that are coming to market that are focused in the space. So it only makes sense that it's a matter of time before we have a bit of a flooded market in that sector, wouldn't you say?
Oh yeah, for sure. Like it seems like every major car manufacturer is coming out with something.
Absolutely. So we'll watch and see what happens. Okay, we're going to talk about growth versus value in the markets. I don't know if we've ever talked about this to our viewers before. Could you just do a quick example and explain what growth versus value investing is?
Yeah, so I mean, growth, typically is, the person that's buying the hottest trend and looking for the newest technology versus value, which is the coupon clipper who's out there, trying to get the best bargain. And that happens in the stock world as well. So there's companies that, are super high growth, and they investors will pay a multiple premium for those. And there's others that, tend to be probably more slow and steady, and investors tend to pay a cheaper price for them, but they can also have good share appreciation. And historically, most managers, like institutional managers, have one style or the other. They tend to be growth or value in nature with how they manage money, but the market itself tends to favor one over the other at multiple different times in the investment cycle. And if you go back over the last few years, coming out of COVID, we definitely saw growth as the sort of hot investment trend. And that was, if you think about the companies that did really well, technology, healthcare, a lot of those areas. And now we started to see a bit of a shift last year as people moved away from those high multiple, high growth stocks because the growth was slowing and they didn't want to pay that high multiple to where it was more kind of value. So you think about what those sectors are. Those are, a lot of times the material sectors, energy sectors, banking sectors. But now we're starting to see a bit of a rotation again here. And so this chart here that we have up is a relative rotation graph. And what we see here is that the value, the different value indices that we have plotted on here are either in the leading quadrant or the weakening quadrant. And so they're actually starting to decline. And at the same time, the growth indices are in the lagging quadrant or improving quadrant, and they're starting to improve. And this is a longer term monthly look at this. And so what it's showing us is that, for probably the better part of the last year or year and a half, value has really been leading the way. And now it looks like growth is starting in its emergence, is starting to take over. And so we could see, kind of stronger growth metrics from some of the stocks that are in that area over, probably the next 12 to 24 months. Doesn't mean it immediately starts now, but we certainly have seen that shift. And I mean, if you look at what's happened this year so far, the NASDAQ's off to a great start. It's up, I think over 16% on the year so far versus the S&P, which is only up around 7%.
So just would you describe value investing as a bit more of a play on more established senior investment strategies, whereas growth is a little bit more of a play on more speculative small mid cap companies? Is that safe to kind of break it down like that?
You can have high growth big cap companies as well. The very interesting thing is there's some companies right now that are in both the growth and the value bucket that fall into both indices. But yeah, generally, what you're seeing is the more traditional, probably bigger, slower growth companies fall into value, and then bigger companies and faster growing companies fall into growth. That being said, you can have a small company that fits into both those categories. There's a lot of times where a smaller company maybe was growing and their growth stalled out, and then the valuation got quite inexpensive and cheap, and now they're a value company, but their growth is starting to accelerate again. So they're would be considered a value company, but they may end up back in the growth category.
Interesting. Very cool. Okay, we're gonna get into some CSE issuer news, my favorite part of the show. Today we're gonna talk about food today, Bruce. We haven't talked about the food sector in a while. So Happy Belly Foods, which is Happy Belly Food Group, which is a CSE issuer. It signed an LOI with binding provisions for the acquisition of KOA Natural Foods. They specialize in the growth of consumer brands. So essentially what Happy Belly does is they will bring on, food brands, and they help them foster and growth, and kind of get them out into various market shelves. So I think it's probably good for any company that ends up joining their team. KOA is all about natural, certified organic, non-GMO snacks that are delicious. There is a big focus on their company on female entrepreneurship and development and growth. So this all is, it's kind of neat to see these food companies coming to market where, we're starting to see this as consumers where, there's a lot more to just the product that you're buying in these companies. And that's something that we're going to be exploring. Stay tuned in an event that we're going to be hosting in your neighborhood, Bruce, coming up in June. We'll tell you more, so stay tuned on that. So congratulations to Happy Belly and to KOA. I'm sure it'll be a wonderful partnership. Bruce, what's your thoughts on, in the small cap space, especially? This is fairly new to see these food companies. We're seeing plant-based protein, we're seeing organic companies, we're seeing functional mushroom companies, kind of the whole spectrum. What is your thoughts on the food sector?
Yeah, we continue to see a lot of innovation there, and I think we continue to, we'll always continue to see that. What listings provide, some of these smaller companies is access to capital to really accelerate their growth. If you think back in history, there's, typically in the food area, there's always that sort of hot trend or area of growth that, really explodes and takes over. And this just allows them to really capitalize on that if they have great products.
Do you think it's kind of an interesting one thought I had, if you're a speculative investor, or if you like investing in the small cap space and you're building out your portfolio? There's a lot of stuff in the junior space for exploration, for example, where there's no revenue streams. I kind of wonder if this is a nice element to add to your portfolio, because a lot of these companies, they have those revenue streams, and they have the contracts that are going forward, future contracts with companies and with distributors. So there's do you think there's that nice element that adds to them?
Yeah, you're right. They have a completely different profile than what, a lot of junior exploration type companies are. And if you sort of take the Warren Buffett approach to investing, this is a great way to do it, because it's like food, something you get to eat and enjoy. Whereas how is it possible to go and enjoy like an oil well or like a mine, right? Like this is more fun. You get to experiment and, oh, hey, this is my favorite food, I get to eat it. And I'm also an investor.
I'm so intrigued by, the mindset, the mentality, and what drives the next generation of investor, because I think they demand for very different requirements around what they're putting their money in. And one thing that's also interesting about kind of the consumer space that we're starting to see come to the small cap space, whether it be cannabis, psychedelic, or food oriented, is that people have the ability now to be a consumer of a product as well as an investor, to be able to invest on your phone, on your discount brokerage account. You're fairly nimble in your investing opportunities. I think it also, these companies, they gain some traction because they have consumers who are intrigued by, if somebody's passionate about what their branding is, then, it kind of gives them more market share and more promotion of who they are as a company, right? They have a bigger spread out there because they have, born in shareholders and consumers.
Yeah, 100%. Yeah.
Okay. So now that I'm hungry, what are we going to think about going into next week?
Well, there's a lot of earnings left in the US, which have an impact. The day that Tesla came out with their earnings, the next day, the stock price dropped and can have a big impact. And then, we'll probably start to see more rhetoric on what the Fed will do in their meeting in early May next week as well. There'll be lots of people forecasting and, giving their opinion on whether or not they're going to raise, 25 basis points, if they're going to sit still, or if they're going to go higher than that.
That old chestnut, Bruce.
Yeah.
One day we won't be talking about how much they're going to raise rates. One day. We'll pop some champagne on Market Recap when that happens. Well, listen, Bruce, thank you so much. It's always a pleasure to chat with you. I look forward to chatting with you next week. And I believe it'll be the week after. There will be an in-person Market Recap happening in your neck of the woods. So stay tuned for that. So thank you so much again, Bruce. We'll talk to you next week.
Okay, sounds good.